If you got in a time machine and went 20 years into the past and told someone that a billion-dollar company was built to help men trim their balls, that person would have called you crazy. But luckily, you live in 2022, and it is a reality as Manscaped completes a SPAC valuing them at $1 billion. In today's video, we are breaking down the bull and the bear case for the equity, the competition that they face, and you'll get Hannah's opinion on the product.
I'm Hannah, this is Erin, and you're watching the Piper Rundown. We analyze business and culture to help you win. And you. Today's sponsor of the Rundown, and yeah, don't leave out this guy. Today's sponsor of the Rundown is JetStore. JetStore has been providing affordable, reliable, and easy to manage data storage and cloud solutions to over 4,000 customers worldwide for more than 26 years. They handle zettabytes of storage. I just had to buy a 5 terabyte hard drive, and I'm pretty sure a zettabyte is like 1,000 or so terabytes. Crazy. They can handle all of your data storage and cloud management needs. Check them out at jetstore.com.
Manscaped is going public. They're going public via a SPAC that could result in as much as $300 million being raised for the company. We've talked in the past, sometimes there are redemptions of those of those investors that gave money to the Bright Lights acquisition vehicle because of their leadership team and the belief of their ability to go acquire a compelling company. But if they don't want to, not all of that money will necessarily be realized when this deal is finalized within the next month. But regardless of how much money enters the Manscaped balance sheet, it sounds very weird to say enters something that's Manscaped, but the company at the time of the deal will be valued at $1 billion.
Hell yeah.
That's a pretty steep valuation for a men's personal care brand that came to market and came to prominence for selling a product that they call the lawnmower.
God, I love it.
You do?
I do. I can't wait for the meme factors segment here, Erin. I'm so excited.
I'm not going to ask yet about your preferences as it pertains to some of Manscaped's products, but they were founded in 2016. And I was actually thinking about this. Man, I'm getting on the meme factor already. They've kind of accomplished the Zamboni of their genre.
100%. That is the perfect analogy. They are the Zamboni of pubes.
Credit to Paul Tran. They sell the buzzer, the trimmer for men's groin region. And their growth story, their story here is that because of the brand equity that they've invested in, with sponsorships of the UFC, Rob Gronkowski, Barstool Sports, the San Francisco 49ers, NASCAR, Joe Rogan, they have the ability to spread to the entirety of men's body in the personal care space. There's some legacy competitors here. Mm-hmm. There is no real nascent upstart with quite the same brand positioning. Mm-hmm. And they are going to be adding a bare minimum of $75 million worth of capital via a PIPE from the Guggenheim Partners Group, Endeavor, which we covered in a past IPO video, and Channing Tatum. So Magic Mike is getting into the Manscaped game.
Why am I not surprised? That's so appropriate for his brand.
Quick note, Mike Mahan, who is the head of the Bright Lights Acquisition Corp, brought Sierra onto the team associated with this SPAC. They've got Channing Tatum putting a pipe in. They've previously been involved in Ryan Reynolds' Aviation Gym and in Kim Kardashian's Skims, which were private investments, but similarly involved. So they have a penchant for celebrity-tied brands. Mm-hmm. And what's our rule when it comes to tequila, Hannah?
Never buy a tequila brand from a celebrity.
Write that down.
I mean, on to the numbies. I'm sure you got them.
I got numbies.
Let's go.
Trailing 12-month revenue in 2018, just $13 million.
Okay.
$65 million in 2019. $211 million.
Wow.
In 2020 and $290 million in 2021. So growth is definitely slowing. Mm-hmm. We went 5x to 4x to 20-ish% growth, 25% growth. And they're telling us that it's going to be $500 million in trailing 12 months revenue by the end of 2023. That's the beauty of these SPAC things we've talked about before. You can just throw something up against the wall for what the future may hold when it comes to a SPAC transaction, not something you can responsibly, legally, or ethically do when it comes to more conventional IPOs. Adjusted EBITDA, also going like this. They lost $2 million in 2019, completely understandable considering the growth.
Sure.
$5 million profit 2020, $3 million adjusted EBITDA profit in 2021. It's going to be $59 million in 2023.
Wow.
That's what they're projecting.
Hey fellas, look what I found in my pocket. Look, a year's salary right here. What I call them? Fun coupons. See that?
Okay. All right. Interesting.
A tad high.
A tad high. Just a touch.
But they do have some distribution bona fides. So 61% distribution on their own direct-to-consumer channels. That means someone goes to their website, someone subscribed to the email, they get pinged, they go buy their new lawnmower 4.0, they buy some body wash or whatever it is else it is that they are selling. 24% is marketplace, so that is platforms like Amazon, and 15% retail channels. Those retail channels include locations in 1,800 Targets, 950 Best Buys. That one surprised me.
Yeah.
I would not think of going to Best Buy.
Wild.
It's an electric device. I can give them that.
Yeah.
But I'm there for printers and computers and cell phones and TVs.
I don't imagine going up to the Geek Squad and asking, "Where's your personal grooming section?"
Yeah, that would be an interesting kind of, they do the different brand collabs. The Geek Squad, completely...
Oh, God.
My balls are my fucking balls.
350 Macy's as well. And another thing, just some of the wordplay here, it's unintentional comedy from my eyes. Maybe they actually have more of a sense of humor. In the last 3 years, it's not sold, they've deployed 4 million trimmers.
Wow. Wow. Thank you for your service.
And all that on supposedly just $23 million raised in private funding. They do have lines of credit because it's retail, but relatively capital efficient to $250 million in annual revenue.
Hot diggity dog. All right, let's move on to the comp section. You already teased some legacy brands we might be facing here. I have some in my mind that I would compare.
Go ahead.
My brain immediately goes to Billy, which is kind of the female counterpart to Manscaped, because it also was one of the OG DTC brands that I can think of that was always advertised on podcasts and like in all the same spaces that Manscaped was. So Billy is definitely, I would consider a comp.
Interesting. That's an interesting bingo because that literally didn't cross my mind because of the male versus female psychographics for personal care products.
Exactly.
Perfectly demonstrated right there. That should be in a marketing class.
It really should. That's why you come to the rundown, right?
Yeah. So right off the bat, we need to get one of Channing Tatum's past SPACs, which was Strive. Since de-SPACing, which is the act of actually completing the merger, the company is down 73% and is worth just $58 million in total market cap. So not a great track record for old Magic Mike's investing.
Okay.
You don't want to follow him into trades.
No.
If historical data is any indicator.
I wasn't really going to anyway, but good to know for sure.
He has cultivated a following. On the men's personal care side, you've got two of the CPG giants, Unilever and Procter & Gamble. Unilever is the owner of Axe. They have a $137 billion market cap. Procter & Gamble owns both Old Spice and Gillette and has a $383 billion market cap.
Damn, son.
So the capability to deploy capital against this is present in the incumbents. However, they have not really positioned themselves. I would actually say that Old Spice, the Old Spice guy, talking about needing to use a Gillette razor, that has to have all sorts of other implications that would just be hell to try to navigate bureaucratically.
Yeah.
But that is the character that I think could actually go compete with a Manscaped type of character.
Yeah.
Outside of that, I don't necessarily see it happening.
Yeah.
The other player, Philips Norelco, with their $28 billion market cap, is the legacy. They've been doing this type of hardware for a very long time. And I have seen them also advertise with Barstool and some of these other players in that use case, but nothing about their branding screams the exact same specific use case. I think Phillips Norelco, I think about my face. I don't think about every inch in the hairs on my toes, you know?
Gotcha.
I do have hairs on my toes.
Didn't need to know that. I don't think any of them did either.
Nobody asked you, Patrice!
If you want to see it, let us know in the comments.
Oh God, we're not getting into that business.
And finally, Vita Coco, another video that we did in the past that has a very, very specific brand positioning. And despite large incumbents like PepsiCo and Coca-Cola and some of these others wanting to compete there, they don't have the singular focus of Vita Coco and their industry leadership as the coconut water brand. They're down since their IPO. It has been a tough go over the last few months for risk assets. They're down to a $580 million market cap. And part of the reason that I mentioned that, when I saw that, I thought to myself, I kind of want to nibble a Vita Coco.
Oh,
Nibble a little bit of that for the old portfolio.
Okay, interesting. Wow. Is that all the comps you have?
Those are.
Well, on to possibly the best part of this video, the meme factor, where Aaron and I rank the memeability of a company on a scale from 1 to 5. 1 being negative memes, 3 is completely neutral, and 5 is all the positive, dank memes. Aaron, you want to start this one?
Oh, wow. Throw me for a loop here. I am going to give Manscaped 2.4.
Not at all what I was expecting. Why? Explain.
Well,
Explain yourself.
anything that's associated with trimming
Okay.
is not a positive trait. I'm going to trim down. I'm going to cut this down to size.
Okay.
That's harmful. I also don't think that in general, people want to tie their identity to looking like a Ken doll.
That is your own personal preference. However, I think that's the most BS meme factor answer you've ever given.
And on the brand side, I think there's a ceiling that has to be put on any brand where I could not conceive of someone wearing the brand on a shirt unironically.
Totally fair. I will give you that. All right, so I'm going in the completely opposite direction.
Okay.
I think Manscaped has a phenomenal meme factor score, and here's why. They were smart by pushing their product into the audiences, into the spheres early on that would appreciate the memeability of the brand. The Barstool guys, any of the comics who have podcasts, they all advertise for Manscaped. And I mean, literally, you know how you will skip through the ads when you listen to a podcast? If Tom Segura is going on some rant about his Manscaped use, I'm gonna fucking listen to that shit. It's so funny. And so I think Manscaped automatically has all of these hilarious associations already to me. That said, what?
No, I want to let you finish. I was about to step on your thing.
That said, I also appreciate the actual use of it. It's a phenomenal product. So, I'm going 4.6.
Wow.
Yeah.
So you're a fan of the product.
I'm a fan of the product.
So this is what I'm going to say. One of the points in their investor presentation is they were really trying to highlight it's not just dudes under, like we're getting dudes as old as 35 using this product.
Yeah.
I'm telling you, in the realm of personal care, and I agree, Axe and Old Spice aren't having a lot of success with dudes over 35 either. I'm getting the nascent stages of this, and I'm sure it'll be way worse when I'm 50 years old. The degree to which I want to worry about that is already cresting in any way, shape, or form, and I don't see that coming back in any meaningful way in the future. The precise ball trimming instinct is a young man's instinct. It ain't an old man's game. It ain't gonna be an old man's game.
Depends on your definition of old.
Fair enough.
Let us know what you think in the comments. Give us your meme factor score. Are you on my side? Are you on Aaron's side? This has been one of the most unique meme factor segments I think we've ever done here on The Rundown. Before we move on to
I feel like we've also shared a lot about ourselves.
We really did, like, so much information that's now just out there.
Yeah.
So you're welcome. Hit that like button for us. Pretty please.
I agree.
Onto the bull and the bear case.
On the bull side, 3 major factors. Number 1, international expansion. If you got a playbook that works, you could say same thing with Uber. Uber, came to prominence in North America, and then they figured out how to go compete in other areas. The reality is, though, that while Uber was able to promise all this potential market realization, they got booted out of China. They have struggled to compete with some of the European companies over in that continent. Other areas just doesn't have the necessary volume to really make a difference to the bottom line. But there is the capacity for international playbooks to be run in other parts of the Western world at the very least. Further, you have the recognition that from a brand equity standpoint, there was another, I was just doing Amazon searching just to kind of see what came up when they said that they sold on Amazon. And there was another product on Walmart that calls itself the Manscaper, but isn't by Manscaped.
That's ridiculous.
And so while that is a smart strategy by that company to sell their product, it speaks to the very unambiguous corner that they sit on and they will own in perpetuity as long as they don't mess up their brand equity. Like it owns that corner for sure.
Yes.
And finally, the men's personal care space is one in cyclical growth. I don't have numbers on its CAGR, but I do know from a number of other entrepreneurs that I know in the space, it is one of those areas that is growing. Women's cosmetics has kind of already, like they're trying to optimize, right? Like go from 99 to 99.9%. Whereas men's personal care, there are plenty of dudes yet to still learn that lesson, yet to be attached to any brand in any way, shape, or form. And so that is part of the growth story that is compelling. On the flip side, this is a D2C retail company with very, very meager profit margins. And so even a 3.5x multiple on revenue is a pretty high market cap to revenue ratio, enterprise value to revenue ratio, particularly when $300 million of that is just cash potentially added to the balance sheet in the future, assuming that some of that will not actually be seen through.
Right.
Further, you got the Channing Tatum track record, which is a one-off. That's not like real financial data or analysis, but you do have the reality of competing in the realm of hardware. And hardware, as evidenced by the smartphone wars, as evidenced by the laptop wars of the past, is not a cheap game in which to play.
Right.
And so, yes, I think the brand can get you there to buy the product for the first time, but you have to continue executing with the equipment itself, because at some point, when I'm a 33-year-old man, I'm not there yet, I'm getting there, I'm going to Wirecutter and just seeing, hey, someone who's tried it all, what's the most reliable piece that's not going to break?
Yeah.
And I'm not looking to go be rebuying this product every 1.5, 2 years.
Yeah.
That's why they want to sell consumables. That's why they want to sell you shampoo and shaving gel and these other products, because that's where that's why Unilever and Procter & Gamble are such big companies, because it gets consumed and you have to go buy it again. That hardware piece, you have to be excellent in order to maintain customer loyalty.
Totally fair. Well, that's a rundown. Let us know your thoughts in a comment. And thank you to our sponsor, JetStore, for sponsoring the rundown. They're awesome. Check them out at jetstore.com. We'd like to shout out one of our commenters from a recent video. On our Richard Clarita insider trading video, which was just recently published, Govern Fool said, "All the shows are great, lots of important details. I rely on your show for more accurate news than most major broadcasters. Keep it up." That is like probably our favorite thing to hear ever on the rundown, so we appreciate you. Thank you for your viewership, and if you haven't subscribed yet, what the hell are you doing? Smash that button.